Good morning and welcome this morning to Introduction to Cryptocurrencies. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and I'm joined out there in the chat by my good friend this morning. Well, he's not just my good friend this morning, he's always my good friend, but he's here this morning with me. Kevin Horner, 28 plus, 29 plus year veteran of the financial markets, and he is out there to help answer your questions along the way and facilitate the conversation. So, welcome to Kevin. Glad to have him on board. Chat your questions in if you're here with us in the live version. If you're in the recorded version, leave us a comment in the comments section. Now, this particular webcast of Cryptocurrency Basics is one that we have recently started doing. It is one that we've actually run through a couple of different times in the four-part series, and now represents a little bit of a transition period because as we move from those four kind of introductory discussions about cryptocurrency, we have a couple of different recordings of each one of those. Now we're going to move into a phase that is a little bit more commentary driven based on what's going on in the market around cryptocurrency at the moment. We'll talk about individual illustrative and educational examples along the way as we have always done. So part of that is my normal co-host in this particular webcast, Jim Ferrioli, who's the director of cryptocurrency strategy and research at the Schwab Center for Financial Research. Has a busy schedule, as do I, and so he's not always able to be here with me. So you've got me solo today as you did last week. But we'll see how things go today and see how things play out as we get into this more commentary discussion as opposed to the basics. Now, we will touch on the basics for those of you that are brand new. I'm going to show you where the playlist is. In fact, I've copied the playlist out there into the chat of the recorded versions of this webcast, and I'll show you where more of that content is. But as we get started here this morning, as always, there are some housekeeping items that we do need to take care of. First of all is the reminder that this is for illustrative and educational purposes only. So that everything we talk about is intended for general informational and educational purposes, whether we're talking about a specific symbol or a concept or an idea or anything else. So everything that we discuss should not be considered to be any kind of advice or recommendation or anything else. We're going to use some technical analysis in this discussion. Technical analysis is only one way to look at the market. It is theoretical in nature, as are all other methods of looking at the market. And so, as a result of that, Schwab doesn't recommend the use of technical analysis as a sole means, or really any other means as a sole means of investment research. So, when we talk about digital currencies like Bitcoin, we've got to remember that they're highly volatile. They're not backed by a central bank or a government, at least not yet. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. So there is some volatility. They are speculative instruments. Cryptocurrency related products carry a substantial level of risk. They are not suitable for all investors. Make sure that you understand that level of risk and it is appropriate for you if you make that decision before considering any strategies incorporating cryptocurrency or cryptocurrency derivatives or related products. Investments in cryptocurrencies are new, highly speculative, and may be subject to changes in prices, liquidity, risk of loss, regulation, other risks that might appear that are not known yet. So just be aware of all of that as we get into this discussion. As we also talk about this, again, because the technology relating to digital assets is new and developing, and those risks associated with the technology is changing, things may change along the way. Just be aware of that fact. Now, we're going to be using the Thinkorswim desktop software platform, specifically the paper money version of the platform. It is a great learning environment. It is not, however, guarantee future success out there in the real world, and things differ in the paper world, specifically in the area of running searches and scans, using studies, as well as fill prices for orders. So just be aware of that as you move your practice from paper trading to live trading. Things like stop orders, there's no guarantee that the execution of a stop order will be at or near the stop price. Same thing with stop limit order. There's a potential that that order might not get filled. So just keep those things in mind. Also, um, just as we look at various instruments in this discussion today, recognize that we may use things like futures contracts. We're using those not as a trading instrument, but more as a mechanism for tracking market movement, specifically here in the cryptocurrency realm. So we'll get into that here in just a moment. But as we get through here, I want to talk a little bit about just really quickly. And again, I'll show you where these resources are. And I've put the cryptocurrency basics playlist out there in the chat. But really quickly, just a quick review. Digital currencies are a form of money that exists entirely in electronic or digital form. There is not a tangible, for instance, Bitcoin that you can hold in your hand. They are created, stored, and transferred over computer networks. They are decentralized. They are independent of central banks. They are independent of government control. They are independent of traditional finance methods of controlling currencies. And that's by design, but it also changes some of the key characteristics. Key characteristics of digital currencies are they need to be stored electronically somehow, right? So they're held typically in what are called digital wallets or on online platforms, then they're exchanged electronically. We're becoming much more familiar with that type of characteristic through the use of payment apps or financial platforms that allow transactions to occur across those platforms. So they facilitate faster transactions, theoretically lower fees. They make things a little more accessible. There's really kind of two ways that digital currencies are used in general. One is as an investment product, meaning holding the digital currency and then waiting for the price to go up, or as a transaction currency, like you would use dollars, for instance, greenback US dollars. But there are a couple of different ways that we can look at cryptocurrencies. Cryptocurrency specifically, decentralized digital assets using the blockchain technology as the back end. Bitcoin, Ethereum are examples of that. And then stable coins, which are an emerging technology as well. Cryptocurrency designed to maintain a stable value that is pegged generally with a fiat currency like the US dollar. We'll talk more about those stable coins as we get into later discussions in terms of the overall process. So central bank digital currencies, those would be digital versions of a country's sovereign currency. So if the US Treasury were to issue a dollar coin, for instance, that might be considered to be a central bank digital currency. That has not happened yet. That is one of the concerns, or one of the challenges, one of the opportunities perhaps out there over the horizon. Virtual currencies, on the other hand, digital representations of value not issued by a central bank, often used within a specific online ecosystem. An example of a virtual currency, although it's not necessarily considered such, might be loyalty points, for instance, in a loyalty account. Let's say you fly with a particular airline on a regular basis and you accrue loyalty points. Those loyalty points are a virtual currency that can be used within a specific online ecosystem, and in fact, in many cases, can be purchased or sold or transferred, much like other currencies. So that's an example of a virtual currency as we get into some of these discussions. So crypto and blockchain are inextricably intertwined. Blockchain is the technology on which cryptocurrencies are built generally and based. Blockchain technology is simply the back end ledger of transaction verification. We've talked a little bit about it in other webcasts, but it is that kind of link to transactions that occur. When those transactions get verified, those that verify those transactions or have a stake in those transactions may receive a reward. Those rewards oftentimes come in the form of tokens or coins, like Bitcoin, for instance. So the blockchain becomes a record of the transaction, acts as a public ledger. Maintaining the blockchain through the use of solving puzzles, essentially, is what it comes down to. That gives us the name cryptocurrency, is what maintains the blockchain in terms of that verification. Those rewards come as a function of the mining process. And it's designed to be secure, transparent, accurate, diversified without central control. And the diversification is a security function. The fact that there are many, 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 many entities verifying the ledger and trying to solve the puzzle to receive the reward is what gives it some of its security features. Now, that also presents challenges because there's nobody to complain to when a transaction is wrong or something goes wrong, which it can. I mean, those are some of the risks, right? Scams, hacking, fraud. You send your Bitcoin transaction to the wrong address and it may be gone forever. And there's nobody to complain to or claw that back. Passwords can be lost or stolen. Digital wallets, virtual wallets, the passwords can be lost. Cold wallets, physical USB thumb drives or hard drives, those can be lost or destroyed. So there are some security vulnerabilities with the blockchain. The prices of the rewards can be volatile. There are no regulatory protections necessarily. Irreversible transactions, like we talked about. Now, lack regulatory protections goes hand in hand with this one, which is regulatory risk. Because one of the things that's driving prices of cryptocurrencies, we've talked about it, is the potential for legislative and judicial action when it comes to cryptocurrencies. There is an act running through the US Congress right now called the Clarity Act that has been deadlocked for a while, that is designed to provide and potentially address some of these concerns. But as we get into some of these discussions, that is one of the things that we will talk about. So common cryptocurrencies, and this is by no means an exhaustive list. Bitcoin, Ethereum, Tether, USD coin are examples of stable coins. Binance coins, Solana, XRP or Ripple, Cardano. And again, these are just simple examples, and we're not being exhaustive in this discussion as well. Now, when we talk about this, again, we're going to take this from the general discussion of cryptocurrencies as an investment function, right? An investment instrument. Securing or buying the cryptocurrency, holding it while its value changes relative to something, and then divesting at some later date, where that is the intent. There are other processes and uses for cryptocurrencies, like we've talked about, right? Rails to allow those cryptocurrencies to be transitioned to other cryptocurrencies, for instance, or into fiat currencies like US dollars. There are also a myriad of other uses for cryptocurrencies that obviously we're not going to get into as they become more emergent. So I'm going to jump over here to the Thinkorswim desktop software platform here. As we get into this discussion, the first process that we're going to use in terms of kind of doing this market commentary discussion is what is kind of the state of cryptocurrency. And in this particular case, we're primarily going to use Bitcoin as an example. We're going to use Ethereum as an example. Those two by themselves make up the significant majority of the investment type products and instruments available. Now, like I said, there are myriads of others. And we'll talk about some of those. We'll also talk about some of the stocks specifically that are associated with cryptocurrencies. And we've talked about that in our second section, which is how do investors gain exposure to cryptocurrency? So I want to take a look for, first and foremost here, starting with Bitcoin futures. Now, this is the continuous contract And when we talk about futures contracts here in this sense, we are simply talking about them as a measurement of market movement in this case. So I talk about trading Bitcoin futures and cryptocurrency futures in my Tuesday morning at Market Open webcast, trading futures. And we talk about that quite often, but that's the appropriate venue for that. In this particular case, we're simply looking at Bitcoin futures, Ethereum futures, and Solana futures as a measurement of market movement and not as, in this particular case, tradable instruments. So Bitcoin at the moment kind of sitting right around this 60,000 mark. We talked a little bit last week about kind of the average cost to mine cryptocurrency and specifically mining Bitcoin. And if you think about it in that context, that average, if you think about individual entities that are mining crypto that have a high cost to mine because of scale, and you take the other side of the coin, those companies whose business simply is like Mara, for instance, and we'll look at that here in a minute, whose business is simply Bitcoin mining. That is what they do. That is what the company does. Their cost to produce, because of scale, is somewhere in the $50,000 range, $53,000, $54,000 range. So on average, that cost to produce kind of sits, let me grab my line tool here really quickly, kind of sits right about this 60,000 mark. So from a technical analysis standpoint, we could look at this and say, hey, 60,000 on Bitcoin is likely to be a level of support. Prices touched that level before. It's bounced up from that level a few times. But it's not done much, at least not in the last 6 months or so, in terms of breaking below that level. Why is that level so important then from a technical analysis standpoint? Because that's right about where that average cost to produce is. So getting that Bitcoin to drop below that level becomes a news-driven function that companies have to be willing to sell, entities have to be willing to sell cryptocurrency, Bitcoin, below that cost to produce, which is then going to bring the average of that cost to produce down. Now, there's a natural function built into the blockchain and mining process, which means that when it is cheaper, when Bitcoin is cheaper, it becomes harder to mine. And when it is more expensive, that process changes. The difficulty to extract becomes a little bit different. In addition, we know that every 4 years, the rate of reward drops by half. That's called the halving, and we've talked about that on a couple of different occasions. But here's where we are right now in terms of Bitcoin. We're sitting just below, in this case, the 50-period simple moving average, which has been, over the last few days, acting as a bit of a resistance and has tended in the course of the last year to act as a bit of a resistance level. So price is getting squeezed below the 200, below the 50, down onto this level of kind of that cost to produce. Now, if you want an analog to this idea of the cost to produce Bitcoin, think about it as what we commonly talk about in terms of crude oil as the lifting cost of crude oil. What it takes to get a barrel of crude oil out of the ground is oftentimes a level of support when it comes to crude oil prices. Now, I'm bringing up crude oil prices not accidentally, because we're going to talk about crude in just a minute in terms of its relationship to Bitcoin and cryptocurrencies. But let's pop through these other two futures contracts here as a measure of market movement. So Bitcoin up a little bit on the day, 0.69% on the day, but still overall down over the last 4 or so days. Ethereum, on the other hand, and again, cost in terms of Ethereum is proof of work, or excuse me, proof of stake type of coin. Bitcoin, a proof of work type of coin. So a little bit different relationship in terms of that cost of production. But Ethereum which has a lower notional value, if you want to think about it from that standpoint, has been bouncing off of a level of support down here around the 1530 mark, right around 1500. Nice big round number, which oftentimes acts as a level of support or resistance whenever you have an exchange traded product and humans are involved. But there's a little bit of a diagonal resistance level that's kind of coming down, and we're just kind of breaking above that 50 period moving average, but running into that diagonal. And depending on where you draw that diagonal, it is, of course, discretionarily drawn. It doesn't guarantee that that's where that level of resistance is. But momentum seems to be picking up a little bit here over the course of the last few weeks. We had a very strong, from a technical analysis standpoint, remember I said we were going to use some technical analysis in this discussion. We had a very strong bullish divergence in this particular case, in that you had slightly low, but maybe roughly equal lows in Ethereum at the same time that you had higher lows in the RSI. That suggests, and again, remember, this is an exchange traded product. So in this particular case, this contract, I'm not talking about placing a trade on just the mechanics and how we would measure this, but in terms of seeing that move to the upside, again, running in potentially to that resistance level. So some bounce, some momentum behind that bounce in terms of that pressure to the upside. Bitcoin and Ethereum make up by far the largest components of this discussion in terms of that market. The overall market, and if we think about what the overall global cryptocurrency market capitalization reflects, it's about $2.3 trillion, if we were to put it into dollar figure. Over the last couple of days, it's been on a little bit of a move to the upside overall. Bitcoin and Ethereum moving to the upside. Ethereum today up almost 4% on this futures contract. So maybe a little bit more leadership in terms of Ethereum rather than Bitcoin. Solana, another one of those cryptocurrencies, not as much of a history in terms of the futures contracts, but you can see that it's had a hard time breaking up above that 50 period moving average. The 200 still moving to the downside, RSI still moving in an upward direction. So there is still some upward momentum at this point, at least at the moment. Now, what I want to do is this. I want to pop over here really quickly. I'm going to change my grid to my single grid, which is just kind of my playground, if you will, my sandbox for looking at individual symbols. And I've got a variety of tools on here. The tool that I have on here is a 30 period moving average. This is the crude oil futures contract. And the reason that I want to bring in this crude oil futures contract is this. So over the course of the last couple of weeks, obviously we've seen some pretty significant geopolitical risk as well as oil price acceleration since the beginning of July that have created quite a bit of volatility in the market, at least amongst individual names, maybe not so much amongst some of the leaders in terms of the market capitalization weighted S&P 500. But we have a little bit of a temporary pause that's bringing crude oil prices down by about 7% today. That would suggest maybe a slight pause in potential inflation fears. And when you have inflation fears dropping, when you have crude oil futures dropping, when you have money perhaps moving out of technology, some technology stocks, hyperscalers, AI, those types of things, investors go risk on yield seeking. So one of the areas that they might go yield seeking is in a risk asset like cryptocurrency. So what I'm going to do on here is I'm going to put on a comparison line. And this is crude oil, and I know we're comparing two dissimilar products, but from an economic standpoint, there are some correlations here. So I'm going to type in /BTC. We're going to take a look at that futures, that Bitcoin futures contract that we looked at before. And you can start to see some of that relationship. So it is fairly positively correlated. In fact, we can put a correlation tool on here. So we'll correlate this. And we're up not at a one-to-one correlation, but we're not down into a negative correlation. That correlation dropping just a little bit here. I suspect as we start to see Bitcoin turning up here a little bit, that this correlation may start to invert a little bit. Crude oil down, Bitcoin up, starting to move maybe a little bit more towards that zero line or maybe a little bit below, because we have had periods of time where that correlation has changed. When crude oil has taken a big run to the upside, in some cases, this becomes kind of that safe haven. At the same time, when crude starts to roll to the downside, crypto on occasion will start to make that move to the upside. Yeah, hey, George, we'll talk about that tomorrow um, in terms of the Trading Futures webcast, as far as that particular question about crude oil being in backwardation. But that gives rise to the next question, right? Which is, okay, what are some of the other drivers here of this cryptocurrency move and maybe this rotation back into cryptocurrency? So you've got a couple of other things, right? You've got a couple of other news ideas that are going on. We've got the Clarity Act, which is currently deadlocked, waiting on some ethics provisions on both sides. But um, this is the uh, perhaps biggest impact this particular week. We have a Fed meeting. We have the opportunity potentially for a Fed rate increase. So again, yield seeking, right? So I'm going to pop over here and I'm going to put in TNX CGI, which is the 10-year note. And this is a way of measuring that 10-year yield. We start to see that 10-year yield, which drives on a consumer basis a lot of the interest rate decisions that consumers makes. We could also look at the 30-year in this particular case, but yields coming back a little bit, starting to see this little bit of a move to the upside though in the last week or two. In fact, moving to some new highs on the 10-year. That has perhaps driven a little bit of rotation out of some of those other assets that are interest rate sensitive and perhaps back into cryptocurrencies. We've started to see cryptocurrency turning when when TNX CGI started to rise, when this 10-year started to rise. So starting now, maybe with this little bit of a pullback, to see a bit of a pullback in cryptocurrency. We'll talk in just a second. We'll kind of break this down a little bit, but I wanted to bring the interest rates into the mix because there is that potential for a Fed rate increase. Kevin Warsh at this point perhaps wanting to announce his presence with authority, if you want to take the South Park reference there, and come out with an interest rate hike out of the gate. That could have an impact directly on Bitcoin. The other thing I wanted to look at here really quickly is /DX. And we'll take a look at the dollar index future. So the dollar moving higher has typically, and you can kind of see that weird correlation. It's been kind of a gappy correlation study here. But that being the case, this correlation oftentimes tends to be in that negative range, in that inverse range. So when dollar rises, Bitcoin may fall. When dollar falls, Bitcoin may rise. And again, it is that kind of digital storehouse of value, if you will, right? In terms of because there is a fixed supply, for instance, of Bitcoin. There is a fixed number of Bitcoin, so it is kind of that inflation perspective. All right. Now that we've got that in mind and we kind of got that relationship going, I wanted to kind of clear this board a little bit. I'm going to turn off that correlation study. I'm going to turn off the comparison line here. And I wanted to get to a couple of other instruments really quickly and see what's going on. So we do happen to have some spot currency instruments that we can chart. So for instance, BTC /USD. So for those of you that are familiar with the Forex market, that's a familiar way of designating a currency pair. In this particular case, this is simply Bitcoin priced in US dollars and what we would call spot Bitcoin. Spot Bitcoin this morning down almost 1.13%. But you can see those forces at work here in terms of that direct movement right along that 50 period, in this case, the 30 period moving average as a level of support, right under the 50 period moving average as a level of resistance. We also have ETH/USD as Ethereum spot. And Ethereum, while the futures are up a little bit, the spot price is down a little bit today, down 1.13%. Now, we talked last week about the arbitrage relationship between spot and the futures and how that process works. So if Ethereum is moving to the downside and the futures are moving up, the arbitrage relationship, and I'll go ahead and put this on here really quick, is we'll put this comparison /ETH, and we'll turn that on so that we can see it. And I'll zoom in a little more closely. Here is the Ethereum futures contract compared to the spot currency. So spot's high and the futures are a little bit lower, and those two are closing back in on one another. Then the arbitrage relationship for institutional investors or others might be to sell spot and buy the futures. That's going to bring the two of those back into correlation with one another fairly quickly. They tend not to get exaggerated in terms of that disparity because of that arbitrage relationship. So that's a function of whether we're talking about an individual stock and a futures contract, or we're talking about a commodity and a futures contract, those types of relationships. Again, I'm not talking about trading the futures in this particular case, other than as an example of what brings these prices back and moves these prices back and forth. All right, so now that we kind of have that sense in mind here, one thing I wanted to talk about again, and then we'll take a look at some individual stocks here, is the potential. So I'm going to come back to my single grid. We've got those spot currencies. I'm going to use I'm going to use BTC /USD. And I'm going to take that comparison line off here and click on OK. So here's our spot currency. So I wanted to talk about what might happen in the event of a Fed decision this week and kind of go through those three possibilities, right? The first possibility might be an interest rate hike, hawkish action on the part of the Fed. Second possibility might be dovish activities on the part of the Fed, meaning an interest rate cut. Probably a lower probability scenario in this particular case. And then the third probability, which is probably the highest of the three, is doing nothing, right? Leaving things status quo. So once again, if we think about an interest rate hike on the part of the Federal Reserve, if they were to raise rates on the front end, because that's all they can control, those higher rates increase the yield on risk-free government bonds. Institutional investors may pull capital out of highly volatile, non-yielding assets like Bitcoin and rotate into treasuries where the yield is. Right? So we get an interest rate increase, and we may see a rotation out of Bitcoin. Increase in yield in those rates may also trigger increased borrowing costs, reducing the pool of speculative capital that's available to speculate on instruments like Bitcoin, and that may move Bitcoin a little bit lower. Also, if we get an interest rate hike, that could reinforce the value of the dollar. Because Bitcoin, like we talked about, and we can see this particular relationship here, is priced in dollars. If the dollar is stronger, that puts downward pressure on Bitcoin, this particular currency spot. So it's the same thing as crude oil, right? Same thing as copper, for instance. If the dollar is higher, both of those are denominated in US dollars. If the dollar is higher, the price goes down, right? If the denominator in this BTC forward slash US dollar, if that relationship, the denominator in that relationship is higher, then the numerator goes down. That's just the way it works. Now, if the interest rate cut happens, then as those rates and yields drop, investors are forced to move further out to find returns. That may move currency back into risk assets. That also lowers the purchasing power of fiat currency. That deflationary or debasement puts more of an emphasis on finite supply cryptocurrencies like Bitcoin. It also provides some cheap leverage to invest and speculate, perhaps. And if they leave it alone, we may see more of this movement that is just sideways until we get clarity on the Clarity Act in terms of that regulatory environment that we might be facing coming soon. Now, last thing I want to do here really quickly, and as we kind of roll into the last segment here, I want to bring up this watch list that I have, which is our Intro to Cryptocurrency watch list. And this is simply a list of, by no means exhaustive, a list of stocks that have exposure to cryptocurrency. For instance, we talked about Mara as a Bitcoin mining stock. That is their primary business purpose. So we're going to go over here to the charts. We'll take a look at Mara, and we'll see what's going on with Mara as Bitcoin started to move to the downside. Start to see this little bit of a move to the downward, maybe a little bit of a level of support here, some downward momentum going into their earnings announcement. But you can see, and I'll put on here the correlation to, let's put on here the correlation to spot. I think we can do that. USD forward slash, whoops, BTC forward slash USD. And we'll put that spot line on here. And it won't show it. That's what I was afraid of. It won't show in studies. There we go. Let's see if we can turn that. There we go. Now it will. Okay. So you can see that that has decoupled a little bit. Mara has decoupled a little bit from spot Bitcoin. But again, that if most of what Mara does is mine Bitcoin and their revenue stream is based on the value of Bitcoin, these two may come closer together because of that arbitrage relationship. Not a direct arbitrage, but those two may come back together closely. Let's take a look at a couple of others in this space. One that we have a trade on currently as an example here is PayPal. So we'll pop over here to the chart, and you can see that move that PayPal has made ahead of their earnings announcement. Big gap to the upside in terms of this sideways movement. So momentum kind of sitting there sideways. Stronger correlation here to PayPal to Bitcoin than, for instance, Mara. If we take a look at a company in our watch list like Coinbase or MicroStrategy, whose business is holding cryptocurrency, specifically Bitcoin, you can see the stronger correlation here starting to kind of come back together once again. We take a look at some of those other kind of stocks that are maybe not quite as correlated, but still have some exposure to. One of the examples that we look at oftentimes, in this case, they're the 13th largest holder of Bitcoin, and that is Tesla. Just having gone through their earnings announcement, you can see that that correlation has come back in line with one another, but there is a fairly strong correlation. A fairly large portion of their corporate treasury is held in coin, and so that correlation coming back together post their earnings announcement. All right, so what I want to do here really quickly, and again, as we kind of roll into this transition webcast, I want to pop back over here. I want to show you some of the resources that are available. First of all, one of those resources is right here on schwab.com. It's schwab.com/coaching. And this is where you're going to see our live webcasts and virtual workshop schedule. And you're going to see that forward schedule of the 35 hours of webcasts that we teach on a weekly basis. But it's also your access right here to the Learn tab, which if you click on the Learn tab, then you have a whole bunch of commentary regarding things like cryptocurrency, as well as other influences in the market. You also have some pre-recorded webcasts as well that provide some of that content and information. But if you come back over here to youtube.com/Trader Talks webcasts, and I'll show you where the home page is for this. I'll just pop back to this. This is the home page for the Trader Talks webcast page. And this is available whether you are a Schwab client or not. But this is the location where you can go to find the recordings of these webcasts. Now, we have a specific playlist for cryptocurrency basics. So if you just click on the playlist link, you're going to see that cryptocurrency basics playlist right here. You're going to see all of the webcasts that Jim and I have done, as well as some of the short videos that Jim has done on this particular topic. And if you come back over here and you type in the search bar, crypto, now you see all of the webcasts that we've done that have had some sort of discussion or commentary regarding cryptocurrency, including the Trading Futures webcast and others. So lots of resources right there. Finally, if you want more information about trading cryptocurrency and cryptocurrency at Schwab, schwab.com/cryptocurrency is the resource for you. By the way, speaking of resources, Kevin's posted it out there in the chat. We've got a feedback survey. Let me know what you think about this particular webcast as we make this transition from the basic information to now more market commentary. And we're going to build this out and figure out more ways that we can talk about this and relate this and show those examples. But let us know in the feedback survey. Click on that link, fill out that feedback survey. It's just a couple of quick questions. Appreciate that. And then remember, when you go here to the Trader Talks webcast page, click on that subscribe button if you haven't done so already. Also, you can follow us on social media. I'm at Ben Watson CS on X and on LinkedIn. Kevin Horner is at Kevin Horner. Jim Ferrioli is at Jim Ferrioli on X as well. You can follow him out there as well. So my thanks to Kevin Horner for helping out. My thanks to all of you for joining us today in this particular webcast, as well as our great production staff and our reviewers. Thanks for being here. We will see you back here in this time slot next Monday morning for more cryptocurrency discussion. We'll see you then. Take care. Bye-bye.